If you are holding your portfolio in US cash right now, you are actively sitting out the largest backdoor wealth transfer we've seen this decade. Retail investors typically panic when geopolitical tensions spike, assuming a market crash is imminent. But smart money knows military conflict actually operates as a massive, secret quantitative easing machine, a strategy where central banks flood the financial system with new money to stimulate the economy. This timeline chart highlights the last 16 days of U.S. government activity. The government quietly authorized over $21 billion in emergency deficit spending. This direct liquidity injection flows straight into the broader financial system, pushing up the baseline of macroeconomic indexes with fresh capital. By the end of this video, you will see exactly how to position your own portfolio ahead of the upcoming Federal Reserve meeting to catch this exact capital wave. While retail traders are selling off their assets in fear, this hidden liquidity pump proves that the absolute market bottom is already locked into place. We can already see this newly printed liquidity overflowing straight into the crypto markets, and XRP is providing the clearest real-time evidence. This candlestick chart reveals XRP aggressively pushing upward, completely breaking through the heavy, long-standing resistance barrier at the $1.51 mark. The buying pressure was so intense that the momentum drove the top wick all the way up to $1.60. Shattering these historic price barriers is the immediate localized result of the government's hidden liquidity pump. It is the first major signal of a much wider global crypto breakout. Before we break down the exact mechanics driving this rotation, remember that capitalizing on macro breakouts requires absolute precision timing. If you want to catch the exact moment the next major XRP surge begins, you need to hit the subscribe button and turn on notifications right now. To secure real-time, minute-by-minute data updates, scan the QR code on your screen or check the link in the description to join our Telegram channel. Returning to the macro mechanics, Wall Street operates on a very specific thesis. Geopolitical conflicts consistently stimulate financial markets through aggressive deficit spending and controlled inflation. That $21 billion injection over a 16-day period operates as a silent money printer for institutional players, flooding high-risk assets with completely new capital. Institutional money aggressively buys into these exact geopolitical spending events because they track the real-time flow of liquidity, while retail investors predictably sell their positions out of fear. But the $21 billion injection is only half the equation. Simultaneously, global crude oil prices were on a massive parabolic run, threatening to trigger a severe inflation crisis across the globe. The situation de-escalated rapidly when the U.S. government executed a strategic pivot, permitting Iranian oil tankers to pass unimpeded through the Strait of Hormuz. As this dual-axis chart demonstrates, the moment those global supply chain concerns were eased, crude oil prices violently dumped. Erasing that threat of an inflation spike instantly injected $1.2 trillion in value directly back into U.S. stock markets. Dodging a crippling inflation bullet while simultaneously receiving a $21 billion liquidity injection creates the perfect macroeconomic storm, giving this crypto bull run a massive green light. We can map this de-escalation directly back to the crypto charts, where the bulls have successfully defended and locked in XRP's critical macro support level at $1.43. Now, institutional money is locking its sights on the final impending catalyst, the highly anticipated Federal Open Market Committee meeting, where the central bank dictates the baseline interest rates for the economy. Look at this Bitcoin price chart. The asset is currently compressing tightly within a massive institutional demand zone between 69.8K and 71.7K, perfectly positioned ahead of the Fed's announcement. The broad consensus expects a complete pause in rate hikes, a dovish move that smart money has already aggressively priced in to current market levels. The combination of hidden deficit liquidity, a crashed oil market, and a dovish Federal Reserve provides strict mathematical proof that the absolute market bottom is now secured. We decode these macro intelligence indicators daily, and if you are managing a portfolio right now, you need to watch the precise outcome of this FOMC meeting closely. Go to our YouTube community post right now and drop your vote on exactly where you think Bitcoin goes the second it breaches that 71.7K barrier. With the macro bottom secure, that $1.2 trillion in returning liquidity from the oil dump isn't going to sit idle. It is about to trigger a massive hidden rotation into specific altcoins starting next week. Click the video on your screen right now to discover the exact overlooked token that is actively absorbing this new capital. It will dictate your portfolio strategy for the rest of the year. I'll see you there.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.